The job report was good, but why is that bad? Before we get into why the good report was bad, let's talk about some of the data. The expected number of payrolls was 155,000, which came in well above that at 256,000 jobs for the month of December, and also increased from November when it was 212,000 jobs. The high increase in payrolls caused unemployment to drop to 4.1% and came along with an increase in average hourly earnings of 0.3% for December. Over the last 12 months, average hourly earnings have increased 3.9%, which is a decent number, but just under the expected growth in average hourly earnings. Job growth was seen in healthcare with an increase of 46,000 jobs. That was followed by leisure and hospitality, which saw an increase of 43,000 jobs, and government jobs, which includes federal, state, and local jobs. Well, that number is up 33,000 jobs. Because it was a holiday season, there was an increase in retail jobs of 43,000. Now, that was after the loss of 29,000 jobs in November. There are always revisions to the previous 2 months, but there was not much change here as October saw an increase of 7,000 jobs, and the November report was actually cut by 15,000 jobs, which produced a total decline of 8,000 jobs for the past 2 months. Because the job report was so good compared to expectations, this has put fear in the stock market and the bond market that there may not be an interest rate cut until the fall of this year. This also led to concerns that we could maybe see more inflation going forward. Now, maybe that makes sense for traders to sell, but investors, you should want a strong economy. What that means is your businesses will sell more goods, more services, and increase their profits. Interest-sensitive equities like real estate, well, they were hit pretty hard with a good jobs report, and banks also had a little trouble digesting the good report and declined as well. For investors, I think this is a good report because it shows strength in the economy, and based on the recent job openings from the JOLTS report, I think 2025 will be a good investment year for investors in fairly valued equities. But you will see a lot of scary volatility, which smart investors should use as a buying opportunity. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.